Hey everyone, welcome back to Corporate Decoder. Ever feel like corporate reports are written in code? Today we are breaking down Regal Rexnord's latest quarterly filing. Will it be a smooth ride or will we find some hidden turbulence? Let's find out. Today we are going to unravel what's happening at Regal Rexnord, looking beyond the surface to understand the real story of where the company is heading. But before we dive in, if you appreciate getting straight insights from corporate documents, make sure you are subscribed and also come join the discussion on our Discord server, linked in the description below. This is a Form 10Q filing, which is basically a snapshot of how the company performed over the last 3 months, specifically ending on March 31, 2025. Before we get into numbers, let's address the usual disclaimer. Basically, anything that looks ahead is just an educated guess, not a promise. Actual results can vary, keep that in mind. Alright, let's get into the financials. Remember, these are condensed statements, so not every single detail is there, but it gives us a really good overview. First up, net sales, which tells us how much money the company brought in from selling their products. This quarter, they made $14,118 million. Let's keep this number in mind so we can compare it to last year. Now, last year and the same quarter, that number was $1,547, $7.07 million. So right off the bat, we see a decrease. They're earning less money than they did during the same time last year. That's the first thing that stands out. We'll need to understand why. Let's jump to gross profit. This is the money they have left over after subtracting the direct costs of making their products. This quarter, it's $527.66 million against $53.1 million last year. But here is something interesting. While the revenue and gross profit went down, their income from operations went up. $159.7 million against $133.9 million. Their earnings per share, or EPS, also went up. Basic EPS, the amount of profit assigned to each share of company stock, rose from 0.30 SEK to 0 company stock, rose from 0.30 more profit per share. Now let's look at something called other comprehensive income. The primary driver for the period was an increase of 120 translation adjustments against a loss of $87.5 million in the prior year. This means that the exchange rates were highly favorable this period. Let's move to assets as of March 31, 2025. Total assets are $14,032.3 million. It's essentially the same as December 31, 2024 at $14,033.27 million. But within those numbers, the composition changed. Cash is down. It went from $393.05 million. So they are holding less cash and cash equivalents as of March 31st. Accounts payable, which is the money they owe to their suppliers, went up from $542.08 million to $89.3 million. It's up by almost $50 million. This can mean that they are holding on to their money longer. Long-term debt also went down a bit from $452.7 million to $5,291.8 million. So they are paying down some of their long-term liabilities, which can make the company healthier. One thing to consider is their accumulated other comprehensive loss, or AOCL, going from negative $442.72 to negative $318.18 taught $1.18 to negative $318.41 million down, reducing the overall loss. Now let's scroll through a key table, the statement of equity. We can see all the changes in the common stock, additional paid in capital, retained earnings, and accumulated other comprehensive income loss. We can see how much everything is changing over time. The net income went up from $20.45 to $57.5 in year this year. That's a good jump. They still declared the same dividend, $0.35 per share, so it is stable and the shareholders can rely on it. Looking at the cash flow statement, the net decrease in cash is about $88.2 million against $112.9 million last year. It means that cash usage is lower this year. Interest paid is $76.9 million this year, but it was $94.8 million last year, which is a great improvement, which means they are managing their debt better. Now, let's look at the supplemental disclosure. This section is key as it dives deeper into the cash transactions. It gives context around how the cash flow numbers actually happen. Alright, let's move to note 1, the basis of presentation. These are just normal filings, but the company suggests reading the whole Form 10K from the prior year, which includes more details. Now, for other financial information, this is note number 2. First up is revenue recognition. We see revenue broken down by segment and geography. In North America, they did $1 million less compared to last year 1,025 ton 8 to against 1,123 ton 6 to $95 million. In Europe, sales went down from 293 ton 8 to $250 million. Only the rest of the world went up from $293.80 to $250 and only 5 to $70 and others. In Europe, sales went up from $293.18 to $250.80 to $95 million. This section talks about trade receivables. Trade receivables are amounts owed to a company by its customers for goods or services already provided. This describes what's included in the inventories and how they calculate the costs. It's mostly based on the FIFO, first in, first out cost method. Now here's an interesting table in tangible assets. These are assets that are not physical, such as patents, trademarks, and copyrights. Customer relationships make up the bulk of the value. It sits at almost $3 billion. This discusses debt. They've got a lot of it, with senior notes making up the lion's share. The rating agencies think they're doing okay, but it's definitely something to monitor. It talks about their supplier finance program, which allows their suppliers to receive payment of invoices earlier. Alright, now let's talk about divestitures. The sale of industrial motors and generators businesses in April. They closed for $444 million, but recognized a loss. It might be a one-time hit, but it's something to keep an eye on. Next, segment information. This section breaks down how each of the company's business segments performed. It's helpful to see what's driving the overall numbers. Looking at sales, we see that Automation and Motion Control and Industrial Powertrain Solutions segments brought less money than last year, with $399.27 against $404.08 and $616.60 20 years against $646.03 at $1, respectively, while the Power Efficiency Solutions did great, generating $409 a year and $616.20 a G, while the Power Efficiency Solutions did great, generating $409.40, which is more compared to $3.90 times 46 more cents, 2 cents a dollars against 6 cents at 16, respectively, while the Power Efficiency Solutions did great, generating $409.46, that and 3 cents as cents respectively. While the Power Efficiency Solutions did great, generating $409 mined as in a 16.16.22 against 60.46 for 30 respectively. While the Power Efficiency Solutions did great, generating $409.44 last year. Now let's discuss debt and bank credit facilities. They show about $5.25 billion of debt and bank credit facilities. A company should always look at ways to control debt. Okay, we're moving on to retirement plans. In this section, the company mentions its retirement plans. For the 3 months ended March 31, 2025, the company contributed $5.1 million in the prior year. Now for shareholders' equity. Let's look at share-based compensation. The company uses share-based compensation a lot in their business model to incentivize employers to join the company and do the work needed. During the 3 months ended March 31, 2025, the company granted restricted stock units. Now let's talk about income taxes. It's an important part of any business. This can tell us a lot about where their profits are coming from. The effective tax rate has decreased as explained by the company. Here's the deal with earnings per share. This is the profit assigned to each outstanding share of a company's stock. It's a key way to figure out company profitability from a shareholder's perspective. Diluted earnings per share is calculated based upon earnings applicable to common shares outstanding during the period adjusted for the effect of other dilutive securities. Okay, now let's talk about contingencies. It is a scary but important section about everything that can go wrong that the company has to account for. Here they talk about a range of lawsuits, claims, and environmental concerns. Derivatives. These are financial instruments that companies use to manage risk, like changes in commodity prices, currency rates, and interest rates. Regal Rexnord uses derivatives, mainly cash flow hedges, to reduce risk and volatility in earnings. The company does a great job describing their instruments. Next up is fair value. This is how companies determine the value of their assets and liabilities, specifically using a hierarchy that prioritizes market prices when available. Now, restructuring activities. This section is about any big changes the company is making to its structure. This can include cost-saving measures such as employee termination and plant relocations. Lastly, there are some things that you'll find in pretty much every report. The company's report on controls and procedures says that there have been no major changes or material weaknesses in their financial reporting processes. That's pretty standard, but good to know. So what does this all mean? Regal Rexnord had a mixed quarter. Revenues down, but profits went up. They're managing debt, but have some liabilities from potential lawsuits. Now, looking at these results more broadly, Regal Rexnord seems to be doing fine, but the sales dip is a cause of concern. They are successfully focusing on high profit product, but this is not sustainable in the long run if the world economy faces a recession. Alright, that's our breakdown of Regal Rexnord's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.